All right, it is April 27th. Welcome to your Monday market update. Nikki,
Good
what you got?
morning, everyone. Happy Monday. We are seeing mortgage interest rates into that mid to low six range still to this point. This morning, there was a little bit of a market volatility due to the events over the weekend with Trump. However, that has corrected itself already in the market today. So we expect that mortgage interest rates to remain, pretty immune to any situation from that standpoint. I wanted to talk about the new Fed chair, Walsh. So here's the situation. There was a Department of Justice investigation into Powell, and some of the things that was going on with him. One of the Fed members and one of the voting members said that they would not be willing to clear Warsh to become the next Fed chair unless that investigation into Powell has been dropped. So the Department of Justice decided to drop that investigation. So Wednesday will be Powell's last Fed meeting. Now, Powell does have the opportunity to stay on as a Fed chair for the next 18 months. However, the general feeling out there is that he just wants to be done with this whole thing and is just going to get Warsh in there and just be done with it. So we should have a new Fed chair coming in here pretty quickly. We had originally predicted June, which is that's about the time frame that it's going to happen. So we'll hopefully see a new kind of dynamic within the Fed and a new attitude, if you will, about what they're willing to do from an interest rate standpoint. So it'll be very interesting to see kind of what will happen. We don't expect there to be any major changes right away, but you never know. I mean, the world's a mysterious place right now. There's a lot of volatility in the market. Also affecting things is the negotiation or the proposed peace plan from Iran with regard to opening the Strait of Hormuz. However, one of their requirements is that they still continue to explore nuclear enrichments, which of course is going to be a no-go for the U.S. So we'll be keeping an eye on what's happening there. Today, I want to talk about Fannie and Freddie officially announcing that they are going to start implementing Vantage scores into their automated products, into accepting them as scores for mortgage approval process. As a reminder, the big difference between a FICO score and a Vantage score is that the Vantage score allows us to look at pay history over the last 2 years for common everyday payments, such as utility payments, rent payments, things of that nature that are more indicative of how someone lives their financial life versus what necessarily reports to credit. This is really important for borrowers who have a shorter credit history from a FICO standpoint, really important for borrowers who have good rental payment history and good utility payment history, but just have never had a mortgage. It can help extend that time frame. The FICO score actually looks at credit history over the last 6 to 12 months as far as establishing a FICO score. That's what's been generally used for mortgage decisions. The downside is that that Vantage score has never been used or reported on for mortgage history. So there's not a mortgage lender that has ever been able to use a Vantage score in order to get somebody a mortgage. Therefore, it doesn't have a data or a statistical history of if it's going to work from a mortgage standpoint. So it doesn't have a long enough pay history. That's why it really leans into that 2 year rental payment history or that 12-month rental payment history to be added to that score because it will mimic, or what they think will mimic, the mortgage history and how you would pay on housing in general. So it'll be interesting to see how those scores go up and down and kind of how those scores are affected if the Vantage part goes into the more mortgage side of things. Key differences between your FICO score. So when you're going and you're getting a pre-approval letter or a pre-approval for a mortgage, we always talk about there being a mortgage score versus a consumer credit score. That mortgage score is your FICO score, whereas that consumer credit score is the Vantage score. The FICO score looks more, it's a different algorithm that's ran that focuses more heavily on payment history, the amount you owe to the credit limit that you have, and then also the length of credit history. Whereas the Vantage score more looks at it's more heavily weighted on payment history over time, the depth of credit, in other words, how many different accounts you can have, how many different accounts you have, and the mix of credit and things of that nature, and then looks at the credit utilization, in other words, how much for credit score versus, or how much for credit limit versus balance. So it's a little bit more heavily weighted on the real life. Can I make my payments? And do I have a good mix of different credit histories versus what's your credit card balance and how much do you owe. So it's interesting to kind of see the differences in the score. The Vantage score is usually higher than the FICO score. And if we're talking about how that's going to apply in real world application from a mortgage standpoint, what they're saying right now is that that Vantage score is going to have slightly higher interest rates temporarily versus the FICO score, just because they're getting used to the risk associated with the collecting additional data and investors being okay with adopting that VantageScore into their own systems and into that automated underwriting system. So it's starting to happen. It's going to take a really long time for it to become an official thing because there's so many data points and so many things that have to happen from an automated underwriting standpoint. But we should be seeing it here in the future and help to open the mortgage industry to more homeowners.
Yep. So when you say a really long time, are you thinking like 2 years, 5 years, 12
I
months?
would
What is
say
it?
12 to 18 months before
Okay.
we have a realistic model out there, and then probably another 12 months for adoption into the industry. These things just don't happen all that fast. I mean, when we went from going from it back in the day of the good faith estimate before Dodd-Frank to the closing disclosure, that entire process took 2 years. So people don't really realize from the day that they wanted to implement this no more good faith estimate to using a closing disclosure. I mean, that was a really long time. And us in the mortgage industry, we had to take training for 12 full months on the differences between the two, how to implement them into our business, how to explain the form to the client, things of that nature. Because, although it was supposed to be a less confusing form for the client, ultimately ended up being a more confusing form for the client.
Yeah.
So, it's one of those things where we have to be able to be experts on it before they'll release something like that into the industry.
Yeah. No, and that's good. And it's a move in the right direction. So like
It
we
is.
talked about before, who are the people you would be reaching out to with this new announcement?
Yeah, absolutely. If there were people that were in the market to purchase a home and they couldn't quite get pre-approved, they didn't have a housing payment history, or you heard about a loan denial, or they just came over and it was like, yeah, they can't get their credit score up or whatever that is. Those are the opportunities that we would look at the Vantage score for, where it's like, okay, well, maybe there's another way for us to establish a housing history and a utility payment history that can help increase this Vantage score that can ultimately get them a pre-approved for a home.
Yep. Awesome. Love it. No, that's great. And yeah, it's the people that you had so close and yet it just didn't quite happen. So
Yeah,
that's,
exactly.
there's a few buyers that come to mind as well. Or even what would you say on the investment side? If you've had investors that want to like have renters in, is there anything, a correlation with that?
Yeah, so most of the time, inventors for their renters will be pulling a Vantage score, and that's what they end up pulling. They don't pull FICO scores; they pull Vantage scores in order to qualify renters for properties of their own. So that can be a good indicator from an investor standpoint, saying, okay, are these going to be good renters? Because it will adopt into their prior rental payment history.
Perfect. Great.
Yeah.
Good, good. Awesome. Well, I really, again, appreciate your time today. And this is all headed in the right direction and implementing it and getting it through the testing. Where do the agents that are listening to this or watching this on YouTube find you with their questions?
Yeah, absolutely. You can find me on TikTok, Instagram, and Facebook at Mortgages from MN to AZ. You can also text me at 952-484-1584, or you can email me at nikki@kevnickgroup.com.
Perfect. All right. Till next week. Thank you so much.
Bye,
Have a good
everyone.
one. Bye.